Hi, I'm Brad Sugars and welcome to Business Basics. We're going to go through the 5 ways chart with an example of how it actually works with people. Now, if you're new to the 5 ways chart, let's take a look at it quickly. You can watch one of the other videos to get more of an explanation on this one. But simply put, it's leads, prospects in your business, multiplied by conversion equals the total number of customers in your business. Multiply that by the number of transactions, then multiply by the average sale, gives you your revenues, multiplied by margins, gives you your profits. Now you'll notice it's called the 5 ways. Why do we call it the 5 ways? Simply put, customers, revenues and profits, those 3 are in red on your page. Why? They're highlighted because they're outcomes. There's an equal sign in front of them. They're the least important numbers on the page. The most important numbers are the predictors, the ones that are going to give us that. The 5 areas: leads, conversion rate, average number of transactions, average sale, and margins. Those 5 areas are the most important. So in this example, let's run through it. I'm going to give you a little business here with, let's pretend you had 4,000 prospective customers last year. So here they were, these were prospective buyers. They might have come into your store, called your business, emailed you, responded to a campaign of some sort. You might have door knocked them. However it works that you get prospective customers in your business. Out of that, we're going to pretend that you sold to 1 in 4. Now, 1 in 4 is about average when I look at conversion rates out there. I know a lot of business people think their conversion rate is much higher than that, but again, it's so vital that you actually measure these numbers. It's important that you know how many prospects did we get through the doors today, how many people called our business this week. Then you've got to know how many of them did we actually make a sale to. That gives you your number of customers, which again, you want to know that number. Then we're going to work on how often they come back. Now, this one's a little bit harder to work out in most companies because we're looking for the average number here. I know most people think, oh, a lot of our business is repeat business. But when we get down to measuring it, then we're going to start to find out the results. In this little business, let's pretend of those 1,000 customers you had, which was the 4,000 prospects, 25% of them purchased. Out of those 1,000 customers you have, let's pretend they came back twice on average a year. So you've got a total of 2,000 transactions, if that makes sense. We're going to give it an average sale of $100 per person. So every time they came in, they spent on average $100 with you. So of course what that gives us now is really simply a revenue of $200,000. So it's your little business, $200,000 in revenue, which is 2,000 transactions at $100 a piece. Then we're going to work your margins because revenues are good, but more importantly is the profitability. So we're going to give you 25% margin for ease of math and ease of calculation. That gives us a total of $50,000 in take-home profit for this little business. Now, when we work with you as a coaching client, or when you go to work on this stuff, I don't want you thinking about, okay, I've got to double every one of these numbers. I've got to triple them. I've got to increase them by 1,000%. No. We don't need massive increases. What we need to do is steady as she goes. We need to make small incremental increases, step by step, and when you add them all up or multiply them out, it becomes a massive increase in the bottom line profits. Let me show you what I mean. We're going to work on each area by improving it by approximately 10%. For example, we'll work on the number of leads. I'll give you an example. I worked with a baker one time, and here he was spending $300 on an advertisement and had no idea how much he was getting in results from his advertisement, which is not really unusual. Most people that run advertising still have no idea whether it's working or not. We'll teach you about that in a little while. This guy, he was getting on average about 3 people a week from his advertising when we tested it, when we actually asked people that came in, by the way, how did you find out about us? So we needed to change the ad. We changed the ad, we did a whole bunch of different things, and we increased it to 587 people in the first week. Now, you think about that just for a moment. That's a slight increase. It's a little more than the 10% we're after for you. But imagine if you've got to work with, let's imagine you attended workshops with my coaches, you worked with a coach one-on-one, you're in our profit clubs or went to our planning growth clubs or, whatever it is, just read the books, starting there. If at the end of the day, a year from now, you've learned all of the 70-odd strategies we have for improving leads, could you get 10% better lead flow next year over last year? Of course you could. So in this case, we're going to go from 4,000 to 4,400. Then what we're going to do is we're actually going to work on your conversion rates. So in working conversion rates, we're going to aim again for a 10% increase. Now, this one here, in most cases, just doing the measurement of it will increase it by 10%. Why? There's focus on it. But what if we had to train you and your sales team? What if we had to put scripts in place to help the sales conversion? What if we had to improve the brochures and letters and things that worked with you? What if we had to do any one of the 87 strategies to improve the conversion rate? Again, do you think it'd be possible to add a 10% better conversion rate this year over last? So in this case, we go not 10% more, by the way, 10% better. So it's not 25 to 35, it's 25 to 27.5. So only 2.5% more. That's all we're after. Now, I've already done the math for you. That gives us 1,210 customers. Then what we're going to do is we're going to work the number of transactions, the repeat business that you get. We're going to do a whole bunch of different strategies to get your customers coming back more often. If you're like most businesses, all you're going to need to do to get more transactions is actually keep a database and invite your past customers back. That's probably some of the most important things we can do. But then again, we've got over 70 strategies here to work with you on to get that stuff done. So read the books, go to the workshops, do what you need to do to learn these and get them into play in your business. Now, again, a 10% improvement there. Very simply put, 2 becomes 2.2. We're not trying to double these things, gang. We're just trying to have a small incremental increase in each of the areas. Then we're going to work your average sale. Of course, average sale now, so many different things we could do here, from sales training right through to bump add-on selling, right through to price increase. So many different things that we can work on to improve the average sale every time. Again, just measuring it in most cases will improve it because there's a focus on it all of a sudden. What are we going to achieve now? So, of course, if we've increased that from 100 to 110, we've increased revenues by 10%, haven't we? Yet, no, we haven't. What we've actually done here is increased revenues to 292,820. Now, what's that? That's a 46% increase in the revenue. It is. Do the math. Work it out. See, we're multiplying here, gang. We're not adding to stuff. Then, of course, we're going to work your margins. Now, any good accountant will tell you if revenues are up 46%, margins are probably going to be up already. But let's imagine we had to use any one of the 50-odd strategies to do that. Then what have we got? So we're at 27.5 for margins. So what's that give us? A total of 80,525 and 50 cents. Now, when you take a look at that number, let's go over very simply. That's a massive 46% increase in revenues and 61% bottom line increase. I'm not sure there's too many businesses that would argue with a 61% bottom line increase. Now, here's a simple question. Imagine if we did this and instead of getting 10% in all areas, we got some areas at 12, some at 15, some at 20, and even other areas where we did 40 and 50%. See, what's the bottom line improvement? In fact, if you double each of these numbers over a period of years, then in this little business, if you double it from 4,000 to 8,000 and 2 to 4 and so on and 25 to 50, ultimately you get 3.2 million in total revenues. Now, I know that seems crazy, but listen, working with a coach is about this. You work with a coach 1 year, you do 10%. The second year, you do another 10% on the 10%. The third year, you do another 10% on the 10%. That's the aim of the game. Hopefully by using the 5 ways, know your numbers, measure your numbers, and then work on improving your numbers. Remember, build the business, don't just work in the business. Grow it. Use the 5 ways to do that, and you'll get real leverage and start multiplying your profits. I'm Brad Sugars, and these are the Business Basics.